Hi candidates, welcome to another session of Manifested Online classes. My name is CPA Joseph Kimani, your lecturer for financial reporting and advanced financial reporting. So in this session, I want us to look on topic number 6 of advanced financial reporting and analysis. And as far as this topic is concerned, we're going to look on other reports which companies are expected to prepare other than the financial reports, and also some of the emerging issues as far as the financial reporting is concerned, whereby we are going to look on emerging issues such as the conceptual framework for financial reporting, the process of developing what we refer as the international financial reporting standards, and also other emerging issues. And therefore, some of the topics or some of the subtopics we are going to cover under this topic number 6 include number 1, a conceptual framework for financial reporting and the process of developing a new accounting standard. Here we are going to look on two main aspects. Number 1, we are going to discuss what is financial conceptual framework for financial reporting, and also the process or the procedures which are followed by the International Accounting Standard Board when coming up with a new international financial reporting standard, that is IFRS. Then subtopic number 2 is a proposal to revise or basically update existing standard and recommendation to issue a new standard. So basically here we are going to look on the process which is followed whenever we have a proposal which is to be forwarded to the International Accounting Standard Board to revise an existing accounting standard, or even to issue an accounting standard, maybe to address an accounting matter or an accounting issue which is not yet addressed by the existing standard. We're going to look on the procedure to be followed there. In subtopic number 3, we're going to look on something to do with the management commentary, also known as management discussion and analysis. And actually we're going to see that these are basically the comments which are made by the management of the company regarding some of the events which occurred during the current financial year, both positive and also negative, and how they affected the operation of the company. And actually we're going to look on some of the issues which are included in such a commentary by the management of the companies. In subtopic number 4, we are going to look on something to do with the Capital Market Authority corporate governance reporting framework. So here we're going to look on what the entities are required to inform their shareholders, and specifically here we are referring to the listed companies, what they need to inform their shareholders and also the members of the public whenever the company shares have been listed, or whenever the company shares are trading in the securities exchange market. Then from there we have subtopic number 5, which is about the Global Reporting Initiative guidelines and something called the sustainability reporting. So basically these are some of the emerging issues as far as the financial reporting is concerned. We're also going to look on something to do with integrated reporting, whereby you're going to look on a report which needs to be compiled by the company and which addresses a number of issues other than the financial performance and the financial position of the company. Then in subtopic number 7, we have materiality guidelines for financial reporting, and subtopic number 8, which is the last one, we're going to look on the legal and ethical issues in financial reporting. So therefore these are 8 subtopics which we are expected to cover here as far as the topic number 6 is concerned. So to start with, I want us to start by looking on the first subtopic, which is on the conceptual framework for financial reporting and also the process of developing, or basically the process of coming up with a new international financial reporting standard, of which, as we are going to see, it is the responsibility of a body which is known as the International Accounting Standard Board to develop and also issue a new international financial reporting standards. But let's start with what we refer as a conceptual framework here. We start by looking on the conceptual framework. Conceptual framework for financial reporting. Remember, in this case, I've said here we have two main concepts we are going to discuss. The process of developing a new IFRS and also what we refer as the conceptual framework. So when talk about the conceptual framework for financial reporting, this we can say is basically fundamental concepts which are developed by the International Accounting Standard Board. Number one, to help that body, that is to help the International Accounting Standard Board in terms of developing a new accounting standards. And also this particular fundamental concept, they help entities in selecting accounting policies to be applied in preparation of financial statements, because it is upon the entity to be able to select the accounting policies which will be used in preparation of the financial statement. For example, is upon the entity to decide how to depreciate the asset, whether to depreciate the asset using straight line method, reducing balance method. That is an accounting policy. Is upon the management of the company to do what? To select the accounting policy to be used in preparation of the financial statement. And therefore, we can say that this set out the fundamental concept for financial reporting, that guide international accounting standard board, International Accounting Standard Board, which is abbreviated as IASB, in developing a new IFRS, or in developing new IFRSs. So, meaning that the conceptual framework for financial reporting, we are saying it set out the fundamental concepts. Concepts are the same with the principles. Concepts are the same with what? The principles. So therefore, you can say the conceptual framework for financial reporting basically lays out, or it basically set out the fundamental principles or concepts for financial reporting, and which are supposed to guide this particular body in developing what we refer as a new international financial reporting standard. Also remember what we have said is that this particular conceptual framework for financial reporting also helps the entities in terms of selecting the accounting policies to be used in the preparation of the financial statement. So therefore, we can also say here that the conceptual framework also helps the entities, or basically companies in selecting, or basically in developing, or basically coming up in developing accounting policies to be used in preparation of financial statement, statement. So whenever an entity is to come up with an accounting policy, for example, how to depreciate the asset, the method to be used in depreciating the asset, whether straight line, whether reducing balance method, the entity is supposed to be guided by this particular framework in selecting the accounting policy which will be adopted, which will be used by such an entity in preparation of what? In preparation of financial statement. So we can further say that the conceptual framework basically set out a number of issues, or basically it has it includes a number of concepts, because that's what you have said. It set out a number of concepts. So which are some of the concepts, which are some of the principles which are included in this particular conceptual framework? So therefore you can say it set out the following, the following. Number one, the objective of the general financial statement. Objectives of a general financial statement. So mean that the conceptual framework basically has given the objectives of preparing the financial statement, of which, according to this particular concept, whenever an entity is preparing its financial statement, that is the income statement and the statement of financial position, then they are supposed to be prepared to communicate now to the users the information about the performance of such an entity and the information about the financial position. That is the objectives of the financial statement. So the other issue which is also set out in the conceptual framework are the qualitative characteristics of a good financial information, So the characteristics, or basically the qualitative characteristics of a good financial information, they are also clearly highlighted at this particular concept, at this particular framework here. And according to this particular framework, for any financial information to be deemed to be of high quality, then that information must possess certain qualities, or basically certain attributes, which are broadly classified into two. This is something definitely you covered in the lower level. So we have the what we refer as the fundamental qualitative characteristics, which include faithful representation and also something called relevance. Something called what? Relevance. And then from there we have enhancing qualitative characteristics, which include understandability, which include timeliness, which include what we refer as comparability, and so on. So those particular qualitative characteristics of a good financial information, they're also included, or basically mentioned under what we refer as a conceptual framework. So also the conceptual framework set out the issues to do with the definition, or basically it defines various elements of the financial statement. So it set out the definition of assets, liabilities, revenue, expenses, and equity. So basically what that means that the conceptual framework actually define all these elements of financial statement. For example, assets are defined under conceptual framework as those particular resources which are controlled by the entity and basically which are expected to generate some commercial returns, or basically which are expected to generate some cash flow. So therefore, all these particular elements of financial statements, they are clearly defined under the conceptual framework for financial reporting. So number 4 is that the conceptual framework for financial reporting also talk of the issues to do with the description of an entity, and its boundaries, number 5 is the issue to do with recognition and derecognition of assets and liabilities in the financial statement. So when talk about recognition, is basically the process of recording an asset or even a liability in the statement of financial position. When talk about the recognition of an asset or liability in the financial statement, is the process of removal of an asset or liability from the statement of financial position. So therefore, what the conceptual framework for financial reporting has done, it has actually given the criteria for recognizing a financial or basically asset and liability, and the criteria for recognizing or basically removing an asset or basically a liability from the financial statement of what? Of an entity. So basically these are some of the issues which have been addressed, or which are actually addressed by this particular conceptual framework for financial reporting. So then from there we can look on the other issue here, and that is the process of developing IFRS. So we can look on the process of developing a process of developing a new IFRS. So first of all, when we talk about IFRS, we are talking of International Financial Reporting Standard. And basically in this case, it is first of all important to note that it is the responsibility of the International Accounting Standard Board, basically to develop or to come up with new accounting standards. So, and currently that body issue new accounting standards, which are known as the International Financial Reporting Standards. So far we have 18 IFRSs, 18 International Financial Reporting standards, which have been issued by this particular body. Maybe first of all we can say that IASB, International Accounting Standard Board, develop and issue new IFRSs, International Financial Reporting standards. And in this case, for this particular body here to be able to issue a new, or basically to be able to come up with a new standard, a new International Financial Reporting Standard, basically that will involve a due process. Some research will have to be done for this particular body to be convinced that a new standard need to be issued, maybe to address some issues, some accounting matters, some accounting issues which are not yet addressed by the existing standards. And once that particular research has been done, and ISB is actually satisfied that a new standard need to be issued, then there will be a consultation across the world. And basically this particular consultation will involve accountants, will involve financial analysts, and also will involve other players in the financial market sector, basically for this particular body to be able to know the standard to be developed, and maybe some of the issues to be addressed by that particular standard, So, and therefore you can say that IFRSs, IFRSs are developed through a formal system of due process and a broad international consultation, which will be involving various parties, which will be involving now the accountants, the financial analysts, and so on, involving accountants, the financial analyst, other users, and the regulatory bodies. Bodies here, we are talking of regulatory bodies such as ISPAC, such as maybe CMA, and so on, and other regulatory bodies from across the world. across the world. So therefore it is important here to note that for this particular body here to develop a new standard, then we are saying that that will involve some formal system of due process. Due process means that a lot of investigation, a lot of research has to be done for this particular body to be satisfied that a new standard has need to be what? To be issued, and some of the issues which that particular standard need to address, some of the accounting issues which need to be addressed. And once that research has been done, then there will be a broad international consultation which involve accountants, the financial analysts, other users of the financial statement, and some of the regulatory bodies around there or across the world, such that before this particular body can start that project of coming up with a new standard, then it will be satisfied that there is a need for the standard to be issued, and also the body will be having some information, ISB will be having some information regarding some of the accounting issues, some of the accounting matters which that particular standard need to do what? To address. So then from there we can look on the due process. So which is the process which is followed by this body in coming up with a new standard. So we can look on the due process. And actually the due process here, we are talking of the steps which are involved in coming up with a new IFRS. And therefore we can say that the process of developing a new IFRS, involves the following steps. So here we have around 4 steps which are involved. We can talk of step 1. Step 1. So when talk about step 1 here, this body, that is International Accounting Standard Board, first of all, it will form something called advisory committee. So this particular advisory committee is supposed to advise the International Accounting Standard Board on the new standard which is to be developed, the matters which are to be addressed by that particular word standard. So that is the first step. So, and therefore we can say step 1 involves establishing now the advisory committee. So we can say the International Accounting Standard Board establishes an advisory committee to advise on the matters arising from the project. So in this case, when we talk about the project, we are talking of the project of developing a new standard. So anytime the International Accounting Standard Board is developing a new standard, that is like a project which is basically undertaken by this body. So therefore, it will first of all establish advisory committee which will be able to advise it on the matters arising from that particular project. So then we have step 2. Step 2, and once this advisory committee has been set up, and then it has been able to advise this particular body on the new standard to be developed. So what happens is that this body will come up with something called an exposure draft. An exposure draft is like the original draft of the new standard. And once that exposure draft has been drafted, then it will be given to the various stakeholders, like accountants, like financial analysts, like the users of the financial statement. They try to look on it and basically give their views. They give their views, their comment on maybe the new exposure draft, the areas which need to be amended, the new or maybe the changes which can be made as far as that exposure draft is concerned. So therefore you can say step 2, IASB, International Accounting Standard Board, will do what? Will publish an exposure, that is, will develop and publish an that is a discussion paper for comment from the members of the public, members of the public. So it will develop now that particular discussion paper, which then will be subjected to public discussion, and then that particular body will be aiming to receive some comments from the members of the public, including other stakeholders. So then we have step 3. So step 3, this one will involve reviewing the comments which have been received from the members of the public, and then issuing something called an exposure draft. An exposure draft, we have said, is like a draft of the standard which is to be developed. So therefore you can say after the receipt and review of a comment from members of public and other stakeholders IASB, International Accounting Standard Board, then issues an exposure draft. An exposure draft equally for public comment. For public comment. That is step number 3 for public comment. And then from there we have step number 4, which is actually the last one. So we have step 4. And step 4 now basically involves issuing the final international financial reporting standard. And therefore you can say that after the receipt and review of after the receipt and review of a comment from the members of the public and basically other stakeholders, IASB then issues the final IFRS. So therefore these are basically the 4 steps which are basically involved in developing a new international financial reporting standard. So we have said step 1 will entail forming an advisory committee to advise this body on the project, the issues to be addressed, and so on. Then from there, this particular body will basically develop and publish a discussion paper for comment from the members of the public. And then from there, step 3, after receiving those particular comments from the members of the public, ISB will do what? We look on them, and basically from there issue something called an exposure draft. An exposure draft, which you have said is just like a draft standard. A draft standard which will also be subjected to public comment. And then once those particular comments have been received from the members of the public, this particular body then will come up with a final standard. Will come up with a final standard, and actually after coming up with a final standard, it will then publish it and also set the date for the commencement. Like in this case, there is a new standard which has already been issued, IFRS 18, and it was issued in April of 2024. And actually, the International Accounting Standard Board has set the date for commencement to be 1st January of 2027. So therefore, that basically what happens once the International Accounting Standard Board has issued a new IFRS, it will publish it, basically inform the members of the public about the new standard, and also set the date forward for the commencement. So therefore, those are basically the steps or basically the procedures which are followed by the International Accounting Standard Board in developing or basically in coming up with a new IFRS. So here is today's assignment. Question 1. Discuss the reasons why it is important for IASB, International Accounting Standard Board, to develop conceptual framework for financial reporting. Question 2. Discuss the procedure for developing a new IFRS. Question number 3. Highlight the content of a conceptual framework for financial reporting. For the time being, we stop at that particular point. So see you in the next session as we look on the other subtopic.